Yo, yo, yo. Uh, Today is the 27th, and I took one. Yeah, I took one trade. I'm gonna be going over why it's important to have a draw on liquidity, and it's important to have a bias, but it's also important not to marry that bias. Going into the morning, I alerted in my Discord that I was bullish going into the day, right? We are at all-time highs. We're just pushing higher on every single time frame. On the higher time frames, I mean. Um, yeah, it's just trending higher. The reason why before I say that, yeah, I was just bullish going into the day, and I was marking my levels, right? So the reason I wanted to go longs was one because on the higher time frames, the trend is respecting it. But I also knew that, we see this rejection wick right here on the 4 hour and on the daily up here. Or no, not on the daily, just the 4 hour. And I was thinking that, we don't have any targets up here, right? So we're due for a mini pullback. So I'm thinking if we can get a mini pullback down to here, at least we can take it to longs. But once market opened, you can see later that we just trade way below London's, and then after that, I was bearish. Yeah, I think at 6:53, I said bearish on both ES and NQ. Will be looking for a short opportunity now. Um, yeah, that's why it's important to have important to have your levels marked out just in the case the trend does change on you, so you're well prepared. So to start off, I have my levels, right? What do I have going in here today? I have my previous day low right here, and then previous day high, which is all-time high. I didn't mark it out all the way. I just drew like a ray, so it doesn't like extend off my chart. And then I go into the 4 hour. What do I see? This is the prior day low, and then this was the all-time high that got swept. You can see it better once I drop it on lower time frames, but you get what the picture. This was yesterday's price, which Asia session just completely took out, and then we're trading well above it, which is another reason why I was kind of bullish. Right off the bat on the highest time frame, I see this 4 hour gap right here, right? 4 hour fair value gap. Super obvious, just a little gap right there. Draw that out. Again, I'm not looking anything past prior to low, just because, if anything goes past prior to low, my bias was completely wrong for the day anyways, and I just should probably hop off the charts, like this is all I need to be worrying about essentially. Below priority low, yeah, anything above priority low, and then obviously the target's above. Going down to the 1 hour, again, nothing below here. Keeping in mind though that this was my draw on liquidity after I was bearish, was this new week opening gap. I think in the previous video I spoke about new week opening gap, but this is not something that we need to be worrying about just yet. Just know that it's a draw on liquidity, and that it's an area where a lot of I guess buyers and sellers, both orders didn't get filled yet. So okay, into the 1 hour. I think I marked out London lows. Yep, London lows right here. I didn't mark out Asia high because we already took it out. I didn't mark out London highs. We already took that out. And then I turn it off just so I don't have to see it anymore. And then from down here, do I see any gaps? Yes, I do. I see a gap right here. What do? I put 1 hour fair value gap. Right. Another gap right here. 1 hour fair value gap. All right. No other gaps. 15. A gap right here. Looks like price just hit it though, so 15M fair value gap. Yeah, price just hit it. Actually, I wouldn't even drawn this out because price is still moving. Yeah, I would just leave it there actually. Right now it's 6 o'clock. Let's move over to 6:15. Yeah, right here, 6:15. Before the market even opens, we're already dumping, right? So this was already an indication to me that okay, if my bias could still be correct, we should reject somewhere around right here. I don't want this to go all the way down here tap into this, and then reject, because at that point the trend is just bearish now, even on the higher time frame. I don't want this to go past this London low if we're bullish, right? I want this to kind of do a retrace like this and then go higher, because essentially if we just retrace deeper down here, at that point we're just bearish, like there's no point in going, there's no need for price to be going this much lower to go higher, because this is already a market structure shift. We might as well just be bearish, or we will be bearish along that point, so that's was one thing I was looking for in going to open. Yeah, I think I deleted this. Yeah. Also, another thing at open too, during market open, the reason why I didn't mark out any levels up here just yet was because my bias was still bullish going into the day, right? That's why I had to mark out these levels down here, waiting for price to tap into these key levels. Once price tapped to these key levels, then I would mark out my targets, That's one thing I don't want to clutter my charts either, is just like levels on levels on levels. I would rather just have my key levels marked on the chart. Once the key levels are marked, then I can annotate my targets, right? Because I don't want to get it confused with what my target is versus what my key level is, Yeah, so I dropped down to the 5, and I just honestly waited all morning. I was waiting for my bias to be incorrect. So yeah, right into the open, we just immediately just dump. Yeah, we just get immediate dump right here. Yeah, and at this point I'm kind of like, okay, we're kind of just bearish now. My bias is wrong. That's why I texted at 6:53. Actually I'm just bearish now. If I really, like I said earlier, if this was truly bullish, we should have stayed above this range, all right? And at this point, I'm just deleting all these levels. And knowing that we're bearish now, the closest target to me was this 4-hour gap, right? On the higher time frame, obviously you can see this is an open fair value gap, which also acts as an imbalance. Fair value gaps can also act as a key level, depending on whether or not you're targeting it or using it as a continuation. So this was my target if I was bearish, and that was my drawn liquidity. So now that I'm bearish, right, I have to mark my key levels. So the most obvious key levels I wanted price to go into was this 15-minute fair value gap right here. 15-minute fair value gap. And then also, I think it was this 15-minute fair value gap. And this 15. I just drew it out just because it's there, but I know it wasn't going to run all. I had a feeling it wasn't going to run all the way up there. So I was just marking it out. Waiting on the 5-minute now. And once I see this, I think another 15-minute fair value gap opens up after 6:45. I believe at 7. Yeah, right here. Okay, yep. 15-minute fair value gap. We tap into this. 15-minute fair value gap. Right, and on the lower time frame, we see price tap into this key level right here. And what am I looking for, right? I'm looking for the highest time frame inverse fair value gap. So as I'm scrolling through the time frames, I don't see any. Right? There is none. And usually if I have to go past the 1 minute, I try not to even look at the 30-second. There is one at the 30-second right here, but it was just so small that what I actually took was this 3-minute, was this highest time frame CISD. CISD is just, it's a whole different concept that you guys don't need to be too worried about just yet. But this is more of a discretionary trade. The drawn liquidity was just so strong. This 4-hour gap was right here. We were already in a bearish trend. And another thing to confirm it too was, even though I was watching on the 3-minute, it was playing out on the 4 as well. So I think I entered right here. Yeah, I entered right here, stops above here, targeting here. Yeah, it was like that. And then we also got this 3-minute right here. 3-minute bearish fair value up that does get respected. You can see it closes halfway below, and then boom. After this point, when this 3-minute candle closed right here, I was just pretty confident that it would eventually draw down here. So as I was flipping through the time frames, I also saw that we got this 4-minute CISD. 4-minute CISD, which further confirms my trend, right? So at this point, I have a little more confidence to even stay in this trade. Even though, you know, it wasn't an inverse, it was still technically a change in order flow and still part of my strategy. You know, I still stuck to my rules, waiting for a key level gap tap and then waiting for, or having a higher time frame DOL. So yeah, I think I was just actively monitoring on 3-minute, and then right there it just smacks TP right here. Boom. Another thing I want to note too is I had a break even point right here. Usually usually this is the manipulation leg, right? But as you can see right here, we kind of get a small pullback and then we tap into it, which technically this is supposed to be my break even because this is the manipulation leg, but I just extended down here. And if you can see on this chart too, I would have got stopped out, right? But actually, during my break even, whenever there's an open fair value gap like this, I just set my break even up here instead, where the fair value candle is, rather than keeping it at this level, you know, because price could trade into this like it did, and then respect it, you know. What else? But break even sauce is gonna be, that's not important right now. I'll go over that next time. But yeah, that's essentially what I traded today. It's nice, not too bad of a trade. It was like 1.3 R. But technically the R is always changing, you know. I'm always moving my stop loss either closer down or higher up, or not, yeah, closer down. What else? I honestly think though that on the hard time frames we could just be going down all the way to here, but again, you don't want to be catching these crazy big moves, even though you know price could potentially go down here. You just want to catch the piece of the pie, you know. And what's the lowest hanging fruit was this 4-hour gap. So yep, that's it. Catch you guys next time.